Welcome to the Explainer. Have you ever stumbled across something hiding right in plain sight that just made you do a complete double take? Well, today, we're unpacking a massive financial illusion that's somehow been widely accepted and totally normalized as a legitimate path to wealth. As we put the pieces together on this one, you might start feeling a mix of shock and, honestly, disbelief, because we're looking at an industry that sells a massive dream, but quietly operates on an absolute mathematical nightmare. I want you to imagine a scenario for a second. What if I told you there was a business where a staggering 93% of customers lose their money, the house is literally guaranteed to make a profit no matter what, and yet people just keep coming back, completely convinced that this time is going to be different? You'd probably assume I'm talking about a casino, right? But honestly, that would be a generous comparison, because at least in a casino, the rules are honest. You know the house edge is baked right in, and nobody is out there pretending that spinning a roulette wheel is a legitimate career path. The industry we're looking at today, however, pretends to be exactly that.
All right, section 1, the social media pipe dream, selling the illusion.
So let's dive into this retail-facing version of proprietary trading, or as you've probably heard it called, prop trading. And just to be super clear right off the bat, we aren't talking about the glamorous Wall Street version where some mathematical savant turns 10 grand into $1 million on a Bloomberg terminal. No. We're looking at the version aggressively marketed online, complete with trading challenges, arbitrary profit targets, and extremely strict drawdown limits. Thanks to platforms like TikTok, this space has just exploded. What was a practically non-existent industry just 5 years ago has quietly morphed into a massive $12 billion industry. It's completely entered the mainstream and has Gen Z and millennials absolutely hooked on this promise of overnight financial freedom. The real reason it's grown so fast is because of this absurd social media sales pitch. I mean, if you scroll through the finance side of social media for even 5 minutes, you're going to see the exact same stories on repeat. You've got the rented Lamborghinis, the broccoli-haired teenage gurus flaunting wads of cash, and those completely out-of-context profit and loss screenshots. They sell this pipe dream that literally anyone can be like them. And what's incredibly toxic is how they push this narrative that losses are just, part of the journey. They claim that if you fail, well, it simply means you didn't work hard enough. Moving right along to section 2, the truth about winning. The math doesn't lie. Now, the harsh reality hiding directly behind those flashy online promises is vastly different from the TikToks you're seeing. Here's the staggering statistic they conveniently leave out of all their marketing material. A massive 93% of retail prop traders completely fail to make money. The house practically sweeps the board. Only 7% of prop trading accounts actually manage to turn a profit. But wait, it actually gets worse. Let's say you beat those overwhelming odds. You're disciplined, you're super consistent, and you somehow have a real edge in the market. You make it into that elite 7%. Well, of those who do manage to turn a profit, the average return is only about 4%. Just let that sink in for a second. 4% doesn't just underperform the S&P 500 or gold or real estate. It essentially matches a risk-free U.S. Treasury bond, meaning you could stress so hard over your prop trading account that your hairline needs an emergency trip to Turkey, pay mind-boggling fees, and chase profitability for years. Or, you could take nearly zero risk, do absolutely nothing, get favorable tax treatment, and earn a comparable yield just by buying government bonds. Which brings us to section 3, the real business model. Following the money. So, here is the absolute crucial point. If the odds are this incredibly bad and the returns aren't even impressive compared to a literal risk-free benchmark, who is actually winning from this setup? Spoiler alert, it is definitely not the traders. It's the prop firms themselves. Let's walk through the mechanical trap of how this business model actually operates. It always starts with the trader paying an upfront, non-refundable fee to attempt a trading challenge. In return, the firm gives the trader what looks like a $50,000 or $100,000 trading account. But here's the catch, and it's a big one. It's not real money. It is a paper trading account on a simulated platform. The trader goes about trading, and when they inevitably hit that strict drawdown limit and fail the challenge, the firm simply keeps the original fee, resets the account, and moves right on to the next person. Now, you're probably wondering what happens to that tiny 7% who actually succeed and get a profit split, right? Well, here is the critical, unspoken detail that never ever makes it into those glossy advertisements. Those payouts do not come from real market profits. They come entirely from the massive pool of upfront fees collected from the other 93% of traders who failed. Let's look at the science behind this in Section 4, Math of Gambler's Ruin, Why You Will Inevitably Lose.
This entire setup brilliantly illustrates the very foundation of the prop trading business model. It is not built on finding the next generation of financial savants, not at all. It relies on a fundamental mathematical concept called gambler's ruin. The definition is simple, but it's totally devastating. In any game of chance, where a player has finite capital and a non-positive expected value, it is statistically certain that they will eventually hit a string of bad luck and go bankrupt. It's not because the traders are stupid, and it's not because they're reckless. It's because when you have strict drawdown limits, a capped upside, and a negative expected value, time is constantly working against you.
To make this abstract math a bit more concrete, just think about playing roulette and only betting on black. There are 38 pockets on the board, but only 18 of them are black. That gives you a 47% chance to win, but crucially, it gives you a 53% chance to lose on any given spin. Now sure, you might go on a winning streak early on, but every single spin has a negative expected value. It really doesn't matter how calm you stay or how completely flawless you think your system is, the math simply doesn't care. Because you have a higher chance of losing than winning, you will eventually hit a bad streak. The casinos don't need to cheat you, they just wait. They let time do all the heavy lifting. The longer you play, the more certain your losses become. And prop firms? They operate on this exact same principle with their reset to zero failure conditions.
And finally, Section 5, the ultimate reality check. The system requires your failure. Let's see how this all builds into a perfectly engineered, highly lucrative machine for these firms. Because of gambler's ruin, prop trading is purely a volume business. These firms do not care who passes challenges or who trades well on their platform. They literally only care about how many people try. If 300,000 traders attempt a challenge and 279,000 of them fail, the firm is thrilled. They are absolutely okay with the few who succeed and cost them money because those winners are essential to the whole operation. They act as proof of life. They provide the illusion of hope. The firms use those few winners as free marketing to reach an even greater scale, ensuring massive volume so that the math of gambler's ruin can comfortably take over and guarantee their profit. When you step back and see it all laid out like this, everything just clicks into place. This isn't a story about bad traders making silly mistakes. It's a story about a predatory system designed to only function if the vast majority of people lose. As the source material so perfectly puts it, in prop trading, you aren't the customer, you're the input. Your attempts fund the system, your retries keep it alive, and your rare, highly unlikely wins, those are weaponized to market the illusion to the next wave of hopeful traders. So, knowing that the math is fundamentally stacked against you, and that the payouts of the few are simply built on the financial ruin of the many, the question is really yours to answer. Are you going to continue scrolling past the rented Lambos and the flashy screenshots on social media, actually believing the illusion? Or will you recognize that sometimes the absolute best trade you can possibly make is not trading at all? Thanks so much for joining me for this explainer, and as always, stay curious.